Corporate earnings have largely played second fiddle to Trump's inauguration in the week gone by. But we did see an introduction to the tech focus with the likes of Netflix actually outperforming heavily against expectation with a surge in terms of subscriber growth. Nonetheless, that tech theme really ramps up in the week to come with 4 of the 7 MAG7 names reporting and plenty more. So let's get into the nitty gritty of what's to come for the week ahead with earnings from the likes of Apple, Microsoft, and Tesla. So first and foremost, this is a breakdown in terms of some of the top earnings for the week, and you can see headed up by Apple. You might say Apple are the biggest company out there, but they're not anymore. Nvidia overtaking Apple in terms of market capitalization. Will this earnings report allow them to regain the crown? Aside from that, we've got Microsoft, Meta, Tesla, Visa. We've also got the focus on some of the big oil and gas names, of course, coming at a time where Donald Trump's really trying to turn things in their favor. So ExxonMobil and Chevron as well coming out alongside that. MasterCard, AbbVie, T-Mobile, ServiceNow, Blackstone, and Thermo Fisher. So look, ultimately the week's going to be dominated by those big tech names. You can see here in terms of the market caps, it's those top 4 that are in the trillions. And so the moves from those companies are going to outweigh the moves from the others. If we see a strong week in terms of tech earnings, then certainly it's going to provide the basis for continued outperformance going forward for equity markets. But bear in mind that we've been talking a lot about how 2025, or certainly markets have been talking a lot about how 2025 could be the year where we see a slowdown in terms of growth for big tech. We see a ramp up in terms of growth elsewhere. And we have been seeing greater breadth within markets of late, with strength in terms of the Dow over the likes of the NASDAQ in recent days. And that points towards this idea that we're going to see Donald Trump really trying to turn things in favor of traditional businesses in the US. Whether that is successful or not remains to be seen. And certainly the cornerstone to any big bull market within the equity markets is strength for the top dogs, and that really falls under the MAG7 branch. And you can see here 4 of them reporting for this week ahead. Now you can see the first of those, which will be on Wednesday alongside Tesla, which is also reporting on Wednesday, is Microsoft. Of course, Microsoft has funneled a huge amount of money into these AI projects, funding OpenAI, but also investing in their own projects. And so really it's a question mark around whether we're going to start to finally see that turn into something, or whether it's constantly just going to be a sort of one-way path where they pay money, but they don't necessarily earn significant revenues off the back of it. Look, you know, the backbone of the business is going to continue to be the cloud service. And so the Azure product is going to remain key as it underpins growth going forward. The intelligent cloud as part of that. How are they going to be able to integrate AI into the cloud offering to improve the product? But then also alongside that, we've of course got the likes of the 365 products, the likes of Xbox, the likes of Windows. So growth in that area is going to be key as well. Now, bear in mind, of course, everyone thinks that we're going to suddenly see this massive ramp up in terms of AI revenues, but they still have core products that are likely to underpin whether they do or don't perform well. And generally, a lot of the time, it's not necessarily going to be these new AI products per se, but how they essentially embed AI into their current product offering to make it more useful. Now, let's look in terms of the breakdown for the earnings gone by. And we can see here, this is the annual breakdown. So essentially in terms of performance versus expectations, just sort of one year off, 1 year off, 1 year on, 1 year off over recent years. But in terms of the trajectory going forward, we're expecting to go from 11.8 up to 13, 15, 17, 20. So relatively steady growth. We're not necessarily expecting to see this massive ramp up, but you know, when you're talking about these kind of numbers, you know, it's not surprising really. And certainly in terms of revenue, it's a similar kind of story: 245, 278, 318, 366, 420. So certainly we're obviously on an upward trajectory in terms of expectations for revenues and earnings, which underpins strong share price. In terms of the quarterly numbers, first and foremost, it's worthwhile looking at the surprise figures. And so you can see the last 1, 2, 3, 4, 5, 6, 7, 8, 9. The last 9 quarters, we've seen outperformance on the EPS basis. Not necessarily as long a run when it comes to revenues, but certainly you can see here that generally they manage to guide expectations below where they come in and that provides the potential for a boost in the share price. Now, bear in mind that it's not always the case that an outperformance in terms of the numbers will always result in the share price actually pushing towards the upside. Let's see exactly how it's played out in the past here. So let's just jump into the chart here. So this is the Microsoft chart for the long term. So this is the weekly time frame, right? So it gives you a good idea of the kind of the trend that underpins this stock. And of course, it is a bullish one. And so these are the companies that, obviously you want to, if you're looking for long positions, these are the kind of companies you want to be looking into. And certainly recently, we've seen this significant pullback in towards this new year. So we saw that initial run up post-election. And then much like the wider market, we saw some jitters coming into play. There's question marks around how many rate cuts are we going to see from the Fed and alike. But that pullback took us into the 76.4 fib. We did get beyond that, but ultimately held up, didn't break the 405. And now we're back on the bullish trajectory once again. For 2 weeks, you can see the gap higher and then the push through on that move as well. So it's looking like we're back in this bullish phase here for Microsoft. Let's look at the reactions that we've seen in the past. Actually, we'll go on a daily time frame, 2 previous earnings reports. So on this occasion, you can see we actually saw a sharp decline. On this occasion, we were sort of trending lower coming into it, and we saw weakness. So on this occasion, you can see a sort of gap lower and then a gap higher. So an island sort of candle formation. Down here, we've sort of moved lower. So it's really interesting because we're talking about a company that has, like I said, managed to pretty much outperform every one of the previous quarters. Yet when we're looking at share price, the share price on this occasion is sort of running up and then falters and then ultimately recovers. It's soon after that. This one, we're declining into it, and then we saw this sort of gap lower and then recovering a bit, then rallied, then fell back again, and then moved onwards from there. Coming into this, we sort of downtrend coming into it. We gap lower. We ultimately recovered a significant amount of that, and then we went on a bullish run. We can see once again here, we're rallying into it. We gap lower, and then we saw the bulls back into play. So the common theme here is that generally you see strength in terms of their earnings. The stock actually weakens around the earnings report, and often that marks either the bottom or, well, that is the bottom. You often see it sort of gapping lower, and then we see further weakness potentially, or we see that as the absolute bottom, and soon enough the bulls come back into play. So it'll be really interesting to see if we see something similar. We've come off the back of this pretty strong rebound from that deep retracement. Do we see a potential gap lower, and then that forms the next sort of higher low, and the bulls come back into play once again? Remains to be seen, but certainly a really interesting one to follow at the moment. And certainly when we're talking about AI at the moment, with that sort of $500 billion investment that we've just heard with the likes of Oracle and SoftBank and Nvidia, really AI is at the front and center of the investor mindset as things stand. Next up, we're looking at Tesla. Of course, this has certainly been prominent as a theme for traders recently because Donald Trump won, and he seems to have Elon Musk hanging around in the background constantly wherever he goes. And so, for shareholders, they probably think this is great news because he's going to be able to get in the ear of the president and influence decision-making. That hasn't necessarily worked too well when you see that he's removing the subsidies for electric vehicles, so not necessarily helping things closer to home. The talk is of a 10% tariff on all Chinese imports. So a potential trade war with China probably isn't particularly beneficial for a company that has 22% of its revenues from China. Certainly, there's significant sort of future growth potential for this business. But there's question marks around the sort of cornerstone of the business, which is electric vehicles. So we saw a bit of weakness in terms of demand for the vehicles in China, and we saw so we saw some narrowing margins when we're looking at China as well, because of course we've got this massive sort of price war over in China with the likes of BYD driving down prices. They had to essentially follow suit if they wanted to make any sales out there. That led to them losing a significant chunk of their margins. So will that change going forward, or are we looking at a business that's going to have to just deal with lower prices and therefore their products going to have to suffer as a result? Now, key to the future will be some of the different things they can do around AI, right? So for one, robotaxi. Are we going to see any sort of nods around the robotaxi? Then we've got the Optimus program, which is essentially a robot living in your house, walking around and watering your plants and things like that. Maybe that's the future. There's talk of that coming in at something like 30 grand, which if you're willing to spend $30,000 on a car, you're probably willing to spend $30,000 on essentially a house slave, right? That's what it appears to be, is someone, a human-shaped robot that walks around your house and helps you with the chores. So sweeping up after you, maybe knocking you up a dinner or something like that. But certainly, I find that particularly interesting, because when we're talking about a lot of these businesses that have invested huge amounts into AI, a lot of the time the result isn't necessarily tangible, right? It's sort of back-end operating systems and sort of online services that can be improved. But with the Optimus program, they're talking about something that could be very tangible. It could be the future as we probably saw it in the past, right? Which is like robots walking around. And so that could be a massive new growth opportunity down the line. So any nod towards that development. And then we have, as noted by Morgan Stanley recently, this move away from sort of manual manufacturing and more towards AI, sort of fully automated manufacturing. It's going to bring down costs massively. And of course, Tesla is perfectly positioned to be at the forefront of this. So there's plenty of different sort of elements for the future. It's just a question mark around what's happening right now. Of course, economic weakness in China, the potential for weakness going forward in terms of the trade relationship between the US and China, how that might affect them. We've got the removal of the EV incentives over in the US under Donald Trump. And so there's certainly some significant question marks that are being asked of the company at the moment. And it's sort of like sentiment versus reality right now, because sentiment's great because he seems to be on our television screens constantly. His tweets are constantly showing up. There's talk of him taking over X. So in my mind, it's going to be the new Rupert Murdoch of the internet, right? Controlling exactly what you are going to see and what you're going to listen to. But ultimately, he's a very powerful man, and who's to say that he's going to be wrong on this one? Because we've seen time and time again just how much of a genius he is when it comes to inventing things and making them come to fruition. As talking about going to Mars, so busy man. He's got a lot on his plate. So this is the breakdown in terms of annual performance. We've seen better than expected numbers. I generally like the annual performance figures just to see where markets think we're going in the coming years. Certainly, if we see an absolute massive sort of sharp ramp up, I find that particularly interesting. This year, we're expecting to see weakness compared to the last couple of years, probably associated with the China story in 2024. Then we look forward 2025 onwards as an expectation. We start to build from there. So this essentially is expected to be a low and the base for us to build on. In terms of the quarterly numbers, you can see the last 4 out of the last 5 earnings have all been weaker than expected. And then in terms of revenues, it's just like a bit of a bloodbath, time and time again, missing on revenues. So they have really struggled to actually perform as markets expect them to. So let's see exactly how markets have been pricing this stock in response to this, because like I said, it's sort of sentiment-based reality in a way. So this is the chart. Let's go on to the weekly chart. This is the weekly chart for Tesla. It's been a lumpy, bumpy road, a big run up in that post-pandemic period, massive run up. Then we saw a really significant decline from your sort of sort of 412, 414, all the way down to sort of 105, something like that, right? And then we bottomed all the way out and now up into record highs. But now we're seeing some of that froth coming off, that post-election froth sold off. Then we're starting to sort of recover at the moment. So is this sort of a wider sort of top before we see something to show that it's worth this valuation? Or are we going to see the bulls coming back into play once again? Certainly, you know, when we're looking at this recent sell-off, you could see a sort of A, B, C style retracement, then a sort of double bottom formation. If we look at this from a sort of fib perspective, you know, where did we come into? So we came into a 61.8 by the looks of it, somewhere between the two. So a sort of 70% retracement. So we've come into a deep retracement. We've now started to create higher highs, higher lows. If we break back below this low of 380, then it looks like the bears are going to be back in charge once again. And like I said, you know, we want to look at exactly how it's reacted to previous earnings, because we know that they haven't all been great. Last earnings have actually seen a bump out performance in terms of earnings per share. And you can see we did see a gap high, and that really kicked things off actually, because it led into the election. So people buying around that earnings report would have enjoyed a great run up following a pretty prolonged period of consolidation and chop. So prior to that, you can see here, we saw a decline here, we saw a pop in actual fact, we weakened here, we weakened here. So lots of gaps lower around earnings reports thus far. If we're looking at these, you know, we've got sort of red for weaker, green for stronger, but that's a relatively simplistic way of looking at it, because of course people are looking at different numbers within these reports. But nonetheless, you know, we are of course at a point in time where there's a lot of moving parts for this business. I would say arguably people want to see that the core business is doing well, but they also want to get some flesh on the bone when it comes to these different products that in the future could provide really significant strength and growth opportunities for this business. We have seemingly sort of bottomed out for the time being. So it's a question of whether we continue to trend upwards in accordance with this newfound sort of bullish momentum that's been dominating 2025 thus far for Tesla. So we saw that big post-pandemic run up. We've had a bit of a breather, and we're now starting to see it recovering once again. So are we going to see a move back towards the recent highs of 487? Potentially. But certainly if you're looking at previous examples of their earnings, they haven't necessarily been the most inspiring. And finally, let's jump into Apple. Like I said, the world's most valuable company is no more. It's now the second most, because we saw Nvidia overtake the companies. There's question marks around a number of things at the moment for Apple. You know, of course, there's a lot of sort of reliance on the whole China story and question marks about how things are going to shape up in terms of that relationship going forward. 17% of sales for the company took place in China. So, you know, how are relations between the two countries going to look? Certainly when it comes to the AI side of things, you've got investment, but it feels like there's sort of a limited traction when it comes to the AI offering that they have online. And certainly, you know, some of those AI offerings have been relatively delayed. Now we're talking about this sort of renewal super cycle for some of these businesses. You know, let's say for instance Dell, right? You've got a computer, but the new computer's infused with AI, and you know, it's got a new chip in it that allows you to do all this AI stuff. People are probably going to get sold by the idea that I have to get this new computer. Same thing with the phone, right? If it's going to have completely new capabilities, it's going to push people into renewing probably earlier because they want all of this new functionality. It feels like Apple haven't necessarily been that quick to it and to provide anything that's particularly too tangible. So exactly how that is going to play out is going to be key for the company. And also bear in mind, we've got the fact that the stronger dollar really that does hurt overseas sales for this business. So when you're talking about Donald Trump and he's saying, you know, he doesn't want people to move away from the dollar, I want a strong dollar. Does he really? Because he's all about the exports, and certainly a strong dollar does hurt exactly the thing that he is trying to encourage. In terms of the earnings, you can see here in terms of annual figures, the expectation is a steady growth in the 7s, 8s, 9s when it comes to earnings per share over the coming years of 412, 445, 470, 485. So it's expected to grow steadily. And that doesn't come as a surprise, really. When you're talking about, say, Nvidia, it comes with this, it's just got this big boom and everyone spent, all these huge spending from the sort of top tier tech companies. When you're looking at Apple, what's really going to drive up their numbers to the same degree that you could see for some of the other companies? It's unlikely we're going to see the same kind of growth, and therefore it's just a case of sort of steady strength going forward. You can see that in actual fact, this Q1 is expected to be a very strong one at 235, but it's a cyclical company, right? So talking about sort of renewal periods when it comes to the different phones and the releases. And so Q1 of 2025, which is what is being reported here, typically is the strongest. So Q1 last time around, 218 on the EPS figure, this time 235. And when we look at sort of whether it outperforms or underperforms, weakness last time around, but prior to that, we did see 6 quarters in a row of relative strength compared to what market expectations were. So let's see exactly how the company's share price responded to that. First and foremost, let's jump on the wider picture with the weekly time frame. Here it is. So the weekly time frame shows you that we've been, of course, trending upwards over the long term, but we've seen this really significant pullback of late. Some of it comes off the back of the post-pandemic sell-off that we've been seeing elsewhere. But now at the moment, even when markets are strengthening, let's get the S&P 500 overlaid. So, we saw weakness in the wider market, but when the wider market popped, we haven't seen that follow through for Apple. And it's taken us into a really interesting level here at the moment, which is down here, 219. And so that's your first big port of call in terms of support. From the weekly time frame, we can say, well, all right, we could be retracing this wider move here. So we'll be looking here for your fib retracement. And therefore, this is actually the 61.8 as well. So 220, really big area of support as we head into Apple's earnings on Thursday, the 30th of January. Key to it will be your sort of intraday moves. And you can see here this gap lower. Are we going to see a recovery? Well, I would say if we're looking for a rebound, we're going to be looking for a breakthrough 238. Until then, there is still risk, but look out for the reaction to this area here that we have at 220, the prior support level, the 61.8 Fibonacci level, and a break below that starts pointing back towards your 211 kind of area for this stock. Of course, from a long-term trajectory, we're looking at a long-term outperformer, but certainly we do have these periods of hesitation and caution. And so are we entering that, or is this just a pullback that in the end will represent a really good buying opportunity for a great company? Most likely is that we do ultimately see more upside to come and more record highs for this company. But whether we're going to see further downside over the near term is going to come down to whether we start to break through the likes of 220 or not, as we currently hold up around that confluence of horizontal support and the 61.8 for Apple. That's all for today. Hope this has been useful for you guys. Good luck trading any of these earnings. If you are, there's different ways to do it. You can trade before the event. You can trade during the event or in the immediate aftermath. You can let things settle a little bit and take in the data, try and consider exactly what it means. Is this a turning point for the company? Does this show you something that you feel emboldens you in one direction or another? Different ways of looking at it. But certainly the key thing here is that these earnings reports provide volatility, number one, but also are key moments where you can gauge exactly where this company is going and whether you think that that is a story that you want to get on board with or bet against. Like I said, thanks a lot. Make sure to like and subscribe and check out all of our videos here at Scope Markets. My name is Josh Mahony, Chief Market Analyst at Scope.